Ladies and gentlemen, Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is up 1.5% there on the S&P. Nasdaq up 2%. Semiconductor made a 4% move. How many times did we see semiconductor making 4% move? Just last couple months here. Dow 1%, small caps 1.5, transport 1. Banks up a little bit. Energy's down. It looks like energy along with the emerging markets are the only ones with the red prints today. Biotech 2.2%, healthcare same, home builders 1.5%, along with the utilities, retail up a little bit, Bitcoin 2.6% there, gold, silver miners up a little bit, down 1% or so in the miners. Dollar is flat, oil is up, treasury bond down 1%, VIX got hammered 13% negative. Let's see what the S&P 500 ETF. Spider, 65-minute chart here. So this is where we closed. 1, 2, 3, 4, 5. This is where we closed yesterday. And this is where we pretty much opened up flat here. So that was the first hour price action. We opened up flat, came down. That's the second hour. And something happened on the third, fourth, fifth hour, and a sixth hour. What kind of bullish shenanigan is this out of nowhere? Right, you can see that this market just went berserk to the upside. There must be some sort of was it a full meeting or something like that? You know, I don't big two bullish candles there. It pretty much engulfs last how many days? 1, 2, 3, 4 days of no more than 4 days. Let me zoom out here a little bit. Oh, look at this. So you can see that right here pretty much engulfs like 1 week worth of trading sessions in just last 2 hours. Shenanigans like this can happen. This is why we want to give benefit of the doubt to the buyers. This is why we want to make sure that we do not let the short-term fluctuations get to us. Because you can see we're just right back at it. We're right back to new all-time high level. But the key level, which we've been talking about this entire week, has been this support level, which is what? The gap, the remainder up gap, right? You can see that there's a big up gap there. I talked about this extensively and emphatically starting last week and this week that it will be better for the bulls if they can protect this gap. This gap has been protected. And with that little double bottom here, right? Neckline broken. We're back above the short-term move. Not only that, we're back to all-time 470.58. I'm sure today's move made a lot of bears heartbroken with this move. But the thing about the bears, especially if you've been a bear this entire year, well, you've been heartbroken for around 100 times this year already. And you should learn your lesson. Do not be dating around, right? Dating around with these low-level bearish setups, where it's going to cheat on you over. It's on you if you continue to let her play around like that. But anyway, so you can see, let's zoom out here. And so now we have pretty good looking inverted head and shoulders. Also, we got that, gap remaining open. And with that, bullish pressure continues. And we're right, but we're not at all-time high level, but we're right on. Then we also talked about, in the midterm, right? Did I talk about it 2 days ago? Right, in the midterm, right? We got that move, right? We got that higher high. What does the market wants to do? Cultivate that higher low, right? That's what market wants. So it comes down, kind of a dramatic fashion with the gap down. Everybody gets scared. Everybody's exiting, everybody's shorting, everybody's just panicking, freaking out, right? Calling for the top like they've been doing this entire, 18 months since COVID lows. And then just out of nowhere, just because, again, despite the fact that what had happened last couple hours, you have to understand overall structure, the overall posture, been bullish in the midterm, right? In the overall trend. And in the short term, the micro that we talked about, there's some selling pressure, right? Right? So, but in the midterm, I've been talking about this entire year. how many times over and over again this kind of stuff happens and market just gets right back up. Market isn't gonna make its move straight up. It's gonna have its ups and downs, but up and down is a good thing because that's how market establishes an uptrend. So going into tomorrow, obviously my short-term moving average is currently residing at 465 or so. What I'm going to do, I'm going to give you some levels like I usually do. That's the current resistance level right here, right? That's the prior resistance, right? And that's the current resistance. I'm going to move this up as well. You can see right there. I'm going to move this up. Let's put it right here because I think that's going to be an important level. So you can see prior support, resistance, support. We pushed right through it, but that's the level. You can see that my short-term moving average residing. Should there be any kind of downside, gap down or something, just because we've seen some crazy shenanigan up move, I won't be surprised to see some kind of a jittery action from that, right? These moves doesn't seem too organic right now. So sometimes these things can come right back down, right? So if we do see something like that, I'm going to move this right here too. If we do see something like that, we bulls want to defend 466.26, 46. You know what I'm going to do? I'm actually doing it. Let's do these levels for tomorrow, right? That's going to be the micro term resistance potentially acting. So let's say if this thing does come down, right, we might do something like that where that 468 could act as new support. However, if there's going to be continuation to the downside, let's say, then definitely this is going to be important level. Obviously, you can see all throughout short-term moving as a residing. So short-term average is letting us affirming that 466, 465 is going to be a little bit stronger. So obviously for bulls, you want this kind of take advantage of what happened today. Bears are scared as hell at this point. So gapping up with the best case scenario, right? And just continuing to the upside. Keep this momentum going. Follow through is gonna be important. Let's check out that oscillator and see if we can extract any more information so you can see. And this is what we talked about yesterday. We got into the first stage of oversold level, right? So what I mean by first stage, okay? Well, that's the first stage right here. Here, let's do this. I'm gonna zoom out here. You can see it. That's the first stage of oversold level. You can see the last time we hit that right here, right? You can see it right here. I think I went too far here. That's what I'm talking about. This is the level that the reason why I chose this level. You can see, first of all, can we all agree that this low right here is higher than this low, right? What does that mean? That's a higher low. Where did that oscillator come down to? Right here. Can we all agree this low is higher than this low? Yes or no? Yes. What does that mean? That's an higher low. And then we hit that first stage of oversold level. So that's an oversold level. It's just not extreme oversold. Extreme oversold, I can go back and I can show you, but I don't have time for that right now. But yesterday I showed you. So that's why you see that there's two lines here. I showed you this level yesterday. We are hitting that level. And I tweeted out earlier today in the midday that it was crossing up. So definitely before this upside shenanigan happened, there was all these sentiment was lining up. You see, these things just don't happen out of nowhere, randomly, right? This is not a mistake. It's not a random occurrence. It is not a coincidence. I talk about this all the time. This stuff doesn't happen randomly. When he decided it was going to happen, it happened in an orderly fashion at a level that it was supposed to happen. Right, oscillator getting to the oversold level, we hitting that higher low level, the gap area, the support level, and then once we saw that oscillator crossing up in that oversold level, right? That's when we saw that upside shenanigan today. It is not a coincidence. It is not a mistake. It is not a random occurrence. I'll come back for you. We'll reassess the situation. Enjoy your evening and good luck training tomorrow.